everyone. Jessica Zartler here with Shawn Anderson and Hashir Nabi of the Bonding Curve Research Group, fellow researchers. We wanted to share a public goods token comparison that Shawn put together. Shawn, what was the impetus for this? I know you were kind of chatting with Griff Green in regards to the token engineering commons. We are looking at bonding curves and how they kind of are performing in different market conditions, bear and bull. And we're kind of getting curious, right, about how these prices are fluctuating. And as we start to understand more about bonding curves and their capability and capacity and volatility dampening, what kind of inspired you or what were you thinking when you put this model together?
Thanks, Jessica. Like you said, this work was commissioned by the team at the Token Engineering Commons with Griff Green leading the insights. And the idea was to say, okay, there's a lot of public goods tokens on the market, and most of them didn't perform that well financially through the bear market. But the TEC token was seeming to hold its ground more. It was at many times outperforming Ethereum. And that was largely the motivation for this work to say, here's a public goods token that is funding token engineering public goods. That's the mission of the DAO that issued that token. And by holding that token, you're investing in that ecosystem. And to see that that can also have a financial performance that outperforms ETH is a very powerful narrative to be able to tell. So that began the research into this data analysis. I know a lot of people in the bonding curve space are interested in this topic of volatility dampening. How can we have more stable markets by using bonding curves to issue tokens? And what we found is actually TEC is not the least volatile out of these tokens, but it has the overall best performance if you measure that by the Sharpe ratio, which is it takes account for mean return and minimizing volatility, but we'll get to that.
Sure. So just to point out, I mean, one of the main points of comparison here was how a bonding curve token compared to those tokens that are not bonding curves. Of course, we're exploring in our continuing research the different types of tokens, but we're moving towards dynamic supply rather than static supply. Or we've seen like years ago these fixed supply tokens, and are realizing a lot of projects are realizing that they're not adaptive enough to be able to handle market conditions. So yeah, this exploration was really interesting. And where did you start here? You were pulling historical price data and plugging it in. What was the process that you went through, and what are we looking at here?
Yeah, the process here is pretty straightforward. We went to CoinGecko as a data provider, and through their API, we're able to pull historic prices for each of these public goods tokens that have been deployed across the Ethereum ecosystem, across different chains in the Ethereum ecosystem. So this is a comparison of public goods tokens, each of these tokens having a mission associated with fostering public goods, funding public goods, things along that line. And we see prices here for each token individually. And as we move into the analysis, we're actually going to compare all of these public goods tokens against Ethereum to see how they're performing against Ethereum throughout the time frame given, which is the data starts around some data. We have some longer data than others, but I believe it's around January 2022. Is that right? Or here we have going back to 2021. So
and
yeah.
Briefly, what was the tech stack that you used to put this together?
Yeah, this is a Python data science tech stack. So using the Python programming language, pulling data in through APIs, and then turning it into pandas data frames, and using the HoloViz ecosystem. So the charting here is with HoloViews, which allows us to create these kind of interactive charts that we can explore.
Awesome. What'd you find out?
So let's take a look at some of these results below. Now, to keep in mind with this analysis, this is motivated by the Bonding Curve Research Group to see how does a bonding curve public goods token compare against non-bonding curve public goods tokens, with the token engineering commons, the TEC being the only bonding curve token out of this list. And we can simply see highest performance. So what we did here is normalize price tokens. So if we say at the start of our data range, each token was equal to 1. Let's just say the price of all the tokens is 1. Well, then what's the relative change in price? What's the return over time for each of these tokens? And we can see a normalized view here, which allows us to compare the financial performance of these different tokens. And we can see a dominance from the TEC token.
And when you say return, do you mean like if I bought some TEC tokens for ETH tokens, like would I have had to have trade? Are you talking about kind of like arbitrage opportunity as the measure of
No,
return, or?
it's like a buy and hold. So if you had bought each of these tokens in January 24th, 2022, and you just hold them all individually, well, the best strategy, if you picked one of these to buy and hold, the best one would have been TEC token. Now, this is comparing against the price of Ethereum. So this is kind of normalizing away underlying market dynamics and really just comparing against holding Ethereum.
Okay.
And
So,
what we can see here with the TEC is actually it had quite some time of outperforming Ethereum as an asset. Here we can see 1, which would mean it maintains almost like a constant peg against Ethereum. And throughout 2021, up until about, let's see, March 2023, it was outperforming Ethereum. Since then, Ethereum, of course, has been on the rise. And so TEC is relatively the net return of the TEC token. It holds, I believe it's about 80% of its value. So taking a 20% loss over 3 years relative to Ethereum for holding this public goods token.
cool. And so what does the model not show us, or are there any limitations, or can you give us a little more context? I know in a lot of kind of like data science work, you have to run a lot of data just to say that, yes, we prove this hypothesis and this is actually the case. So how would you contextualize this in the kind of grand scheme of like data science and looking at?
Yeah, I'd say this is a pretty niche, like it's one data point. So this isn't very extensive. We're looking at a small set of public goods tokens in the Ethereum ecosystem. It's a very specific case of products that we're looking at, financial products or public goods tokens, a subset of token types, and we're comparing one bonding curve against a handful of non-bonding curve tokens. It'd be great to scale this out and say, well, what are all the bonding curve tokens versus all the other tokens? So expanding beyond this like domain of public goods would be interesting. And yeah, it's a finite data set. I think continuing to play this out through time is going to be interesting. Now, what we often investigate at the BCRG is parameterization of these systems. So if you are to reconfigure the parameterization of the bonding curve, maybe changing, say, the reserve ratio, you're going to have different outcomes. You're going to change the volatility. You're going to change price exposure. For example, if the TEC had launched a reserve ratio of 1, then this token would have maintained a constant peg. But it would be very expensive to mint the token because it would be fully collateralized. So these are the kind of trade-offs that we make with parameterization, and that's where a lot of the future work of this research group is going.
Yeah, we look forward to exploring more of the parameterization. I think just also in the context of parameters and trade-off decision making for engineering requirements gathering, business requirements, and in case of there are people that haven't heard of token engineering, it's a new and emerging field applying the engineering methodologies and robust validation of mechanisms and mechanism design in launching token ecosystems, which I think we're seeing a big move towards. And that's part of the mission too of the BCRG is to just continue to put out this research, collaborate, and have a shelling point around token engineering and this like open source documentation and building out the modeling infrastructure that we can either model and simulate or feed historical data through and gain more understanding of these mechanisms. So anything else you want to share, Shawn, about this model or what you're looking forward to continue this research?
Oh yeah, just a little bit more here. We see the same data as a log scale, just reveals a little bit of different results, but exact same data.
Mm.
And then finally at the end here, we compute the Sharpe ratio, which you can see here is the mean return divided by the standard deviation over time. This is a very common metric in analyzing financial performance. And we can see that the TEC token compares significantly well to all these other public goods tokens. So this is kind of the end result of this work. And yeah, I do believe expanding the scope of this research beyond public goods tokens, but to other domains, and continuing to research the effects of parameterization on bonding curves and how that could influence the outcomes that we see here is really interesting next steps for this research.
Awesome. Thank you so much.